Welcome to Real Estate Hustlers Podcast. I'm your host. Today we're joined with Nick. Nick is the CEO and founder of IronFocus Investments, a multifamily real estate investment firm. He's a former JPMorgan, and Bloomberg Finance Pro and Ironman triathlete. He brings discipline and data to every deal. Nick, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, thanks for having me on, Josh. It's a pleasure. So yeah, like you touched upon, I'm in the multifamily real estate, have a background in finance. So I graduated with finance and economics degree from Syracuse. And like so many of my friends, I moved to New York City trying to find a job. I ended up working at a small FX trading shop. And from there, I was there for about 2 or 3 years. Then I moved on to a bigger company at JPMorgan, trying to get some exposure to bigger deals, bigger clients. And it wasn't kind of exactly what I was looking for. I was looking for a little more responsibility, a little bit more active with clients, and I just wasn't getting that. So I ended up moving into a sales role at Bloomberg, which was awesome. It was great. I met a lot of cool people, made a lot of relationships, but I was just looking. I realized I wanted to start my own business. And so I was investing in real estate on the side. And I thought, okay, maybe I can make this a full-time gig. So I started IronFocus Investments, where we raised money from LP investors to go after big multifamily apartment complexes. And that's been our focus for the past 4 years, is to raise money and find good deals that we can add value to and cash flow. And that's kind of been the strategy going forward, is find more deals and bring them to investors. And that's kind of going to be my focus for the foreseeable future, and looking to grow slowly, not trying to blow up and do, $100 million in 1 year of assets under management, just looking to slowly grow a couple good deals a year. And yeah, that's kind of the background.
So let's go back to the very beginning, your first deal, how you found it, or did you find it, or did you find the group? How did the first transaction go?
Yeah, the first deal always takes forever. I was kind of looking at duplexes and triplexes and quadplexes, and I kind of realized that it was going to be really hard to scale that and maybe buy, a few duplexes a year. It just wasn't a scalable business model that I was looking for. And so I met a few investors at a local meetup in New York City, and they told me about this mastermind program that they were part of. It's called the Rod Cleef Warrior Group. And so I joined it. It's been awesome. I met a bunch of my partners that I work with on the deals through this group, and they ended up bringing the deal to me. They had it under contract and asked if I could, since I have a background in finance, if I could, underwrite the deal, make sure all the numbers lined up, and then do some of the asset management that go along with it, along with trying to provide some capital from investors. So that's how I got my first deal. And it took a while. Like I said, the first deal takes 2, 3, sometimes longer years just to get it done. But once you get the first one, the ball starts rolling and more opportunities seem to come.
What size deal was it? What was the business plan, strategy, and how's it going?
Yeah, it was 106 units. The business plan was to come in and renovate a majority of the units and raise the rent to standard value add business plan. But we've had actually a couple issues with it. It always happens on your first deal, they say. So we had a fire that burned down 10 units. Oh. And yeah, so that was a battle with the insurance company getting all of the insurance for that. It took a while. It took longer than we expected. We did recoup what we needed to, and so we're hopefully bringing those units back online this year. But because of that, it's kind of been a struggle. It's been hard, and I'm not glad that it happened, but it was a good experience to learn from. Like, now I know how to deal with these types of problems and can probably do it more efficiently in the future. But it always happens on the first deal. It's always a mess. And the first deal never really goes smoothly.
Yeah, it's just totally, I guess, depends. But fires with tenants, I mean, it's tough. What class was it? Is it B class, C class, D class?
It was a C class asset.
C class, okay. I mean, you're dealing with different tenant types, different areas. Things tend to happen. Things actually do happen more in those neighborhoods. I'm a workforce housing investor myself, so we've had our experiences with with incidents, we'll say. But it's just you don't know what you don't know. The next thing is going to be the next thing. It just keeps on rolling. But how's that deal going now? I guess what year did you buy that at?
That was 2023.
Okay. Did you get caught up in the hike real estate hikes and then buy too high, or where are you guys at on the property?
Luckily, we assumed agency debt, so we have a fixed rate of four and change. I don't know exactly what it is off the top of my head, so we're okay. It's not doing as great as we would have hoped because when we lost a lot of revenue from the 10 down units, and subsequent applications haven't been because they see that part of the property's been burned down. So it's a tough investment, but I think we're going to be able to turn it around and hopefully exit for a solid profit in the next few years.
Did you all get the exterior at least? I'm sure you got the exterior curb appeal done, and while the insides were still the way they were, right?
Yeah. So we fixed up the property, but the building is like you drive in and you can see it. So it's kind of hard to bring in high quality tenants when you got a burnt building. So really getting that we had to basically tear down the entire building. It had gone up in flames. I believe it was a grease fire. So this was not a contained fire to just a couple units. It took down the whole building. So we finally got the framing up and it's starting to turn around. So it was a process that was longer, and I didn't know how to really handle it. But yeah, it's just one of those things that you can't underwrite for a fire in the underwriting.
Definitely not. So take us to the next deal.
Yeah, so the next deal was a similar business model. It was in Houston, 126 units. The property came to us off market, actually. The broker was a pocket listing. So essentially they were going to bring it to market, but we had a good relationship with the broker. So we were able to put in an offer before it went on market, and we were able to get the deal at a pretty good price. The owner lived in New York and he bought it just himself and was I don't believe if he was self-managing, but he just owned it for like 10 years and was just kind of sick of it and looking to get rid of it. And so we got a great entry on that. And that's been an amazing deal so far. We closed in the beginning of last year, 2025, February, and we already started distributing cash flow to investors after 6 months. It's been way beyond our projections. We haven't even really done a ton of renovations. We have a budget to come in and renovate all the units, but we've really just done some basic turns where we're putting in some new appliances, doing some painting, but really no aggressive renovations. If the market does turn in the next few years, and maybe we'll use that money accordingly. But right now we're getting great rents, and we're doing exterior upgrades. Like we improve the clubhouse, the playground, the pool. So we're using that money for exterior renovations that the tenants love. So it's been a great project so far.
Got it. Yeah, basis is everything in real estate. You make your money on your buy, and then of course if you got win in your sale, then it just it goes from there.
Yeah.
But good. And then how many total deals have you closed so far?
3 deals so far.
3. Tell us about your third one.
So the third one was a assisted living facility. It was my first deal in this new kind of asset class, which we just closed in December. So we're still kind of in the implementation phase of trying to implement the business plan. The business plan was to come in, and a lot of these properties were not performing well. The owner owned a bunch of assets, and they were having some legal troubles. So we ended up getting these deals for a discount, almost 50% off what they sold for in 2017. So
how many units?
153 units, 173 beds.
Okay.
Yeah. So great deal coming in. But like I said, one of the properties, it was a 4 asset portfolio. So one of the assets was only, I believe it was 50% vacant when we took it over. So there's a lot of legwork to do on that one, and we're working with a team that does specifically memory care facilities. So we're partnering with them on the deal, and they're kind of asset managing it. But it's been a great deal so far, a new asset class for me, learning experience, and then obviously just trying to provide the best care possible for the elderly tenants. And it's in Florida. And so, as you know, tons of people are migrating to Florida who are on the elderly side, my grandparents included. So this is a huge market I foresee really exploding in the next couple of years.
Yeah, assisted living is totally AI proof. So I mean, no matter what happens to the job economy, that sector's still there. Senior living's still there. Those industries are very well gated, meaning barriers to entry. There's a lot of conglomerates that take in the traffic as far as getting lead flow, and getting tenancy. But once you break that and you get into the mix and you start establishing your business plan, I mean, it's great. We've got a property that we it's more of a transient senior living, to where they're in between selling their house and not ready to go into senior living. So it's but that's a whole niche. It's a niche industry. It's something you can cater to. But again, I look for what is AI proof. I like Section 8 vouchers. I like the sticky tenants, the durable income. There's things because there's going to be, I don't know what you're seeing in AI, but there's going to be, in my opinion, some disruption on the horizon with just things being uneasy as things start taking over more and more roles of jobs that were there before. Maybe job creation isn't as fast as they say it is. There might be some disruption. What's your take there?
Yeah, I think, to be honest, I think that the AI, I'm not going to say overhyped, but everyone's super doom and gloom where it's going to take everyone's jobs and we're going to have universal basic income and it's going to be the end of it. And I don't buy that. I think that.
Let me ask you this. Are you using Claude Cowork?
I am using Claude. Yeah.
Cowork, not just Claude Cowork.
I'm not.
You got to download it on your computer, use Claude Cowork, and then we need to re-interview this part. That will open your eyes to what things are possible in the AI universe. It's incredible. It truly is.
Yeah, I understand that, but I believe that there's always jobs that will come from this, and there's always going to be manufacturing jobs, construction jobs. You can't have AI building developments. You need people on the ground. There's always going to be a need for people, and if you can leverage the AI, it just makes it so much easier. I would say that it's actually easier to start a business today than it ever has before because of the use of AI. So maybe your typical corporate job isn't going to be as available as it was, maybe 10, 20 years ago, but there's going to be a whole different kind of jobs that open up through. It's so accessible now. Like 16-year-olds can start businesses and raise money just by using AI. So it's kind of yours for the taking, is my opinion. So I'm more optimistic about the future than a lot of people are, because I don't believe that pessimism doesn't really get you anywhere. Like, you can be pessimistic and you're just going to sit around and be upset all day about everything. Or you can be like, okay, the world's changing. Let me see if I can take advantage of it for the better.
Yeah, no doubt. If you're using it, if you're putting your workflows in, if you're building custom dashboards, integrating your data in through APIs, I'm saying Claude Cowork. I've built my whole. We're asset managing all of our properties on a different level now. Real data being pulled from Appfolio, and dashboards that you would typically pay $1,500 a month for asset management. Where it's whatever you want, and then you put in a prompt, and it gives you another whole new dashboard. But I think my point is the white collar. There's going to be jobs that are just going to get totally wiped out. Like the asset management piece, I don't necessarily need that guy anymore, because now I've got technology that's doing a much better job in real time. I don't need to wait for a response. Those things, but at the same time, asset manager that used to asset manage, say, 2 properties now can do 200. Because now they're dialed in. Now they can use the technology to their advantage and leverage themselves and their time. So it's depending on how you're using it. But will things get kind of bumpy? I see maybe things a little differently. Definitely not pessimistic, excited about it. But you've got to get involved and start using it and be a part of the changes, a part of the new technology and what's on the forefront. I think the A class will get hit more than anything else. But again, I look for durable income properties. Durable meaning it's sticky tenants, durable, it's everlasting through any kind of changes. So tell us about the what's on the horizon with your with your company and where you see your acquisitions going?
Yeah, so as you probably know, the market has kind of shifted over the past 2 years, where it was super easy to do deals in 2020 through 2022. Now there's a lot of people who bought at the top of the market, and the banks or the lenders are taking back these deals because they're not able to make their payments. So we've actually looked at a lot of lender-owned assets, where maybe there's a huge vacancy, or one of the buildings is down, and we're coming in at a significant basis reset from what the previous owner bought it at. That's kind of been our business strategies, to find deals that need a lot of work, but maybe they sold for 120 grand a unit. Or we're talking about, maybe the Dallas MSA back in 2021, we're offering, in the 60s or 70s. So yeah, there's a lot of work, but these are deals where if you can make them work and work with the lender to take over these deals, it's almost a home run guarantee. So obviously, I don't want to guarantee
Are you short
anything.
selling the banks? How are you going about working with the banks?
Yeah, so sometimes you can take over the loan or restructure the loan. That's where we've been at. We are in talks with a couple lenders on a couple assets. We haven't really gotten to any agreements because they're usually taking a big hit on most of these deals. So yeah, they don't like to do it, but they've taken the deal back, and they want to get it off their balance sheets. So we're hoping to get maybe one or two deals under contract in the next few weeks.
So you're bringing in new debt, and the old lender is working out. You're working out a new basis with the old lender, short selling.
Yeah, or we will just assume the current loan. One of the deals that we're looking to do is just assume the loan and bring in a little bit of equity, not just enough to do the rehab. And so it would mean that we would be able to get a bigger deal without bringing a huge equity piece, which would obviously increase the returns for the investors and kind of rework the debt structure a little bit.
Got it.
It's all about being creative.
Maybe putting in some interest only in there to get things back to stabilized, and then amortization kicks in.
Yeah, absolutely. And a lot of lenders are willing to get creative, where it's not like back in the early 2020s where it was buy a deal, you got 2 years interest only, or maybe it's floating rate debt. Everything's creative now. Everything's negotiable, which I kind of like, because you can make deals work that maybe wouldn't usually work.
Yeah. No, and as long as you're a proven operator and you can do what you say you can do, then the lender latches on. They want local operators too. No out of state. If you're looking to buy out of state, work with a lender, it's like guaranteed at most no. Because a lot of these deals are, obviously the basis is the biggest thing, but we're also seeing that property management companies, third party, is to blame too. They've had to hire people in front of them, and then those people don't know how to run a company, a business. Every complex is a business, so it's just almost like gross negligence on some of these distressed deals that we've seen.
Yeah, definitely. But for me, it's really just bad deals when they were buying at 3 caps, where it's just, to me, I just never want to buy a deal at a 2 or a 3 cap. It just doesn't make sense ever to me. I mean, maybe if you're looking at trophy assets and you have a different business plan for me, but I just don't see how you make money in the long run operating on that kind of strategy.
Yeah, no, I totally agree. It's we've bought slow and bought everything at a true NOI. What can it afford right now today to operate and pay its bills? So that's smart. For a beginning real estate investor looking to break into real estate, what kind of advice would you give them?
Yeah, I would say everyone says networking, which I agree with. You can't do these deals alone. These bigger deals, it's really impossible to take on a deal alone. So really, networking. If that's just going to like a local meetup and meeting people, then do that. If you have the ability to join a mastermind, I would do that, because I've just met so many people that I wouldn't have met through going out and networking. So it's just your network is you can't do deals without them. So I think that's the most important, and just build that. And it takes a while. It's not a overnight success. Like, I've been networking for years now, even if it wasn't related to real estate. Like, even when I was in finance, I've leveraged some of those connections that I had in the finance industry. Like, that's still my network. So it's not an overnight success. It never is. You have to build the foundation and the relationships over time.
Very cool. Totally agree, Nick. If somebody wants to get a hold of you, reach out, learn more about yourself, your company, how can they get a hold of you?
Yeah, you can reach out to me on LinkedIn, Nicholas Delmonico, or you can check out my website, IronFocusInvestment.com.
Very cool. Nick, definitely appreciate your time. Look forward to following you. Thank you.
Yeah, absolutely. Thanks for having me on, Josh.